Welcome to the panel discussion, The Investment Case for Diversity, Equity and Inclusion. In this panel discussion, investors will share diversity, equity and inclusion global trends and the best practices in how to build a successful portfolio with an integrated DEI approach. We are pleased to be joined by Jessica Espinosa, Chair of the 2X Challenge and Vice President Private Equity and Venture Capital at the German DFI DEC KfW Group. Barbara Rambusek, Director for Gender and Economic Inclusion at the European Bank for Reconstruction and Development. And lastly, by Emily Thomas, Executive Director, Senior Impact Strategy at Morgan Stanley. The panel will be moderated by Emilia Lopez Huis, Senior Advisor and Lead of the Target Gender Equality Program at the UN Global Compact Network, Netherlands. Enjoy the discussion.
Good afternoon to all the participants in this panel. As Chantal was mentioning, we are going to focus the conversation on welcoming our investment panel for the case of diversity, equity, and inclusion. The context of this panel is set by the coronavirus pandemic and climate change disproportionate impact on women and racial minorities. Fortunately, investing with diversity, equity, and inclusion lens is gaining momentum, although still at a very early stage. An integrated approach must be considered by institutional investors to actively respond to gender and racial gap, weighing it at the core investment decisions. Mainstreaming gender and racial considerations are essential to building a more inclusive and prosperous society and achieving some and crucial SDGs. In addition, countless studies have found that companies with diverse teams can unfold higher profits and better equity returns. On this panel, our speakers will discuss diversity, equity, and inclusion, the global trends and best practices on how to build a successful portfolio with an integrated diversity, equity, and inclusion approach. As Chantal was mentioning, from the United Nations perspective, the Target Gender Equality Program has been set up for companies to accelerate the pace of progress, to close the gap that will take today with the pace of progress of implementation of diversity and inclusion strategies 258 years. With these incredible speakers and experts that will expose how to narrow this gap on implementation, there is an imperative on this, the 2030 Sustainable Development Agenda on how to really, what is the magnitude of the diversity and inclusion conversation? How can we mainstream these strategies? How do you focus your strategies for impact? So I will open the panel to all of our speakers with the first question. What is the investment case for diversity, equity, and inclusion from a systemic, social, and economic perspective in alignment with the achievement of these SDGs? And more specifically, with the SDG 5 on gender equality. What are the key and crucial notions under your expertise and experience in your own portfolios? What are these crucial notions and principles for a transformative approach to investing in diversity, equity, and inclusion? I give the floor to all of you. Please give your specific insights based on your experience and sector. Welcome. You could run, Barbara, from a gender economic perspective as the Economic Bank for Recovery to have a more systemic understanding on the impact of diversity and inclusion perspectives. And then we can go with Emily and Jessica from the Venture Capital and Wealth Management approach, please.
Okay, so thank you. First of all, thank you very much for inviting me to this event. And I'm really delighted to be on a panel with such high-profile speakers and to focus on a topic that is very close to my heart, very close to also the strategic priorities of the European Bank for Reconstruction and Development, but increasingly also very much center stage if we look at the global efforts in terms of building back better, coming out of this current crisis in a better way, and actually really promoting gender equality and a focus on inclusivity and diversity as part of how we reshape the economies, the societies that we want to see going forward in the future. At EBRD, we focus very strongly on promoting gender equality and also equality of opportunity throughout our investments. So in a way, for us, the question has moved on why, but more on how we actually integrate this focus. To date, we have 50 billion euros in investments that directly impact, have an inclusive impact and the gender equality impact. And we work across all our sectors. So what are the building blocks, as you asked? What are the sort of things that make this approach successful? And also transformative. I think here are a number of different areas. First, as an investor, we of course work directly with our clients across a range of different sectors. And clients face business challenges in relation to their workforce, for example. Do they have the right people with the right skills that are fit for the future? Do they also have a diverse workforce that really represents also the people and the communities that they sell into? Is everybody able to access the services that they offer and finds the products attractive that they put into the market? So these are very practical questions. And by resolving those questions, we can actually open up access to economic opportunity for women, for people with disability, people who live in less developed regions, etc. So it's about really addressing a key business challenge and then finding a solution through our investment angle, sort of through building these elements into how we engage with the client. I think another area then is to look at what are the more systemic challenges that we face in relation to diversity and inclusion and gender equality in particular in a given country. What does the legal framework say? What are labor market restrictions? What are regulatory restrictions or barriers maybe that would make it harder for women to set up and to grow their businesses? So again, here we liaise and we liaise with.
Since we have lost the connection
for making the case for inclusive labor market reforms, inclusive policy reforms, in order to in a way shift societies and shift how markets function in a particular area. And then the last one is on capacity building, knowledge creation, and really also using the leverage that we have as investors in order to bring others along. This is about the development of guidance tools. This is about setting international standards, applying things such as the women empowerment principles developed by the UN or EDGE certifications, encouraging our clients to promote this, also adopting them ourselves, and acting in a way as a role model, but also using the convening power and the leveraging opportunities and partnership opportunities that we have in order to further strengthen this message and promote the overall agenda. Very happy to explain more, but maybe I'll leave it at that for now.
Thanks, Barbara. Emily, would you go further from the wealth management perspective? How can you bring this conversation to the link with the SDG 5, this social and economic impact from this systemic perspective, on what the investment from your perspective can bring in this conversation?
Yeah, thank you, Amelia and Barbara. It was wonderful hearing your perspective and echo all of your sentiments about. Thank you for including me on the panel. As you mentioned, I work in wealth management at Morgan Stanley. So we work with clients really ranging from retail to institutional. And so what we've done is create a framework to really think about this as part of your investment process. And I'll start by saying something that I think I'll hit on a little bit more at the end of the answer. But, this can be a lens, like gender lens investing, to look at every single investment you're making, like asking questions about the asset manager, and just asking the questions can have a huge impact because it's showing that you care. Like, we're asking the questions on behalf of our clients, and that's showing that we care, but it's also showing that this is important to our clients, and we've already seen change just from that. So going back to kind of our framework and how we think about this in the investment process. And one other thing I'll just mention, I think we're all on the same page, but this isn't just about doing good, it's about performance. There's so much data out there at this point that shows that diverse companies outperform, and so I think if we're not thinking about it, we're missing a huge opportunity for performance. So, I think more and more data will come out on that. But going back to our framework, so we really think about this in three ways. One is the actual investment. So how is the asset manager, and I'll detail these in a bit, but how is the asset manager kind of thinking about gender and diversity in their investment process? How are they thinking about, the second approach is thinking about how are they engaging, or how are they really pushing the companies in their portfolio to move the needle, to be better, to think about these factors and the diversity at their firm and the products and services that they make. And then the final approach and the third approach is the diversity at the firm. So kind of what I mentioned at the very beginning. So how is the firm thinking about diversity? Are they diverse owned? You know, are they thinking about diversity at the senior leadership level, on the investment team? Do they have bias training? Do they have mentorship programs to support diverse and inclusive environments? You know, just delving in a little bit on that first approach, the investment approach. You know, we think about things like restriction screening. And so, you know, first is, you know, can you think about this from, you know, a negative, avoiding risk? You can think about avoiding companies that are kind of laggards, that don't have diversity on the board, maybe, that have issues with human rights abuses or human trafficking in their supply chain. So, you know, really thinking about this from a full perspective. You can also look at it from an opportunity and really looking for those companies that are leading, that have the diverse boards, that have the diverse leadership, that, you know, are thinking about maternity leave policies and policies that support creating a more inclusive workplace. And then finally, you can think about it as a solution. So what is the revenue exposure, and like, how are the companies, you know, what products and services are they creating that are benefiting women and girls, whether that's they themselves are investing in women-owned companies, or investing in banks that are providing loans to women-owned companies, you know, childcare, healthcare. You know, I think one thing when we were prepping for this, but talking about this idea of intersectionality, thinking about the impacts of climate change on women and girls as well. And so, you know, how are they thinking about all of these factors in their investment decision making? You know, again, going back to the engagement piece, I think that there are a lot of, you know, really interesting stories there, and more, I think that like data is such a huge issue. We don't have the data a lot of times to kind of measure some of these issues. And so really ensuring that the firms are pushing their own portfolio companies to disclose the data. Every company in the US that has over 100 employees reports their diversity data to the US government, but not every one of them is reporting that publicly. And without that data, we can't measure and then ask for change. So we've seen asset managers that are engaging to push for that disclosure. We've seen asset managers that are saying, you need to write and document how you're thinking about improving diversity on the board. And I think measurable data is so important. So how are you making, you know, those changes, and what are your goals, and when do you need to meet those goals, so that we can again measure and ensure that the firm is on track to continue to improve diversity. And then finally, last but not least, and I'll save this for probably other questions, but, you know, again, just thinking about diversity at the firm, where, like, I think it's around 5.2% of private equity firms are women owned, but if you actually look at the AUM, it's even less. It's around 3.4%. And so what, you know, how are we thinking about that? It's not because they're underperforming. In fact, we just said diversity can actually, you know, enhance performance, but it's really about these historical barriers and biases that we've had. So, you know, at Morgan Stanley, we've actually completely rethought some of the ways that we look at asset managers, recognizing some of the historical barriers like AUM and track record. Well, what are some of the issues we're really trying to get at there? But I think there's so many different ways to think about this, and it's incredibly important, again, not just from a do good perspective, but really from performance.
Yes, in this, I want to make, before Jessica goes with her perspective, because building a portfolio of 11 billion with the gender lens perspective is an impressive achievement. But this is very important, exactly, this narrative. How do we move? And at the United Nations with the same issue, and all you are exposing the same. What is the paradigm shift? What is the right narrative? What are the key principles or notions that the public, the general public, private and public sector organizations need to understand for changing this narrative for impact? Why diversity, equity, and inclusion is seen as a minority issue, while being a systemic issue, like the gender dimension is half of the population. But how do you make this systemic approach into a specific approaches and narrative to your own portfolio, and how this narrative can really create an impact success in how you design the strategies for your portfolio? So Jessica, again, for the first question, how can we align in this systemic perspective this SDG 5, and what is the notion that everybody should be understanding before starting to strategize our strategies for impact? What is the right mindset to look at diversity and inclusion?
So when we as the DFIs of the 2X Challenge, and that's now actually a group of 20 DFIs and multilateral development banks, so quite a big group. But when we got started at the G7 Summit in 2018 and launched the initiative, we didn't want to make this, kind of an initiative that stands at the side of your core business and is just like a nice CSR thing, but we actually wanted to bring the gender lens to our core business. So we said the 2X Challenge, has to be about how we allocate capital. And that means looking at the portfolio, and it means looking at every single deal and ensuring that we add a gender lens to that. So when we got started on this journey, we set ourselves a target of 3 billion by the end of 2020. And everybody was quite nervous at the time because this was the first time, we actually went on this journey of gender lens investing. And it felt like a very ambitious target, even collectively. And so what we did is we developed, first of all, the framework, the 2X criteria of what it means for the private sector to invest in women's empowerment and gender equality. And the 2X criteria cover what my fellow panelists have also just shared. So we look at women's entrepreneurship and business ownership, but we also look at leadership. So top management, senior management, investment committee, board of directors. Then we look at representation in the workforce, but we also here added another quality factor because we recognize that simply having more women in the workforce may not necessarily be empowering if they are in low quality jobs and face pay gaps, etc. So we also look at equality factors. So what Emily mentioned, what is what is the career advancement possibility, the pay equity, all of those qualitative factors, maternity leave, parental leave, etc., that really promote equality in the workplace. And then also products and services. I think Barbara mentioned that earlier. So how are products and services designed with a gender lens to benefit women and girls? And importantly, these criteria apply not only at the institutional levels, but in the case of, for example, financial intermediaries like financial institutions or private equity funds, we expect those at the level of the fund manager, so the own institution, but also at their portfolio level, so how they allocate capital and make investment decisions or lending decisions. Now, to really bring this into the core business, what we have done is, and this is interestingly, recently, still relatively recently, that the operating principles for impact management have been developed under the lead of IFC, but also with investors globally. And that is about impact management more broadly. But the way the operating principles look at embedding impact along the entire investment cycle is very much what we have done with the gender lens and the broader diversity and inclusion lens as well. So you really embed it into your investment process. It starts with the intentional sourcing of deals, the origination, identifying also gender bias in your networks and the way you actually source pipeline, all the way to due diligence and structuring, negotiating the terms. And I think that's the beauty of being in private markets, so in private equity, private debt, and venture capital. You, of course, have a lot of influence as an investor, which I think in public markets can sometimes be more challenging. But in our case, we defined we co-defined the investment criteria, set the investment strategy of the private equity fund, for example. So we have a lot of influence and a lot of possibilities to shape how capital is allocated. And then, also in the portfolio management, or what is often called value creation, there's so many opportunities to work with companies over time to actually make measurable improvements. And then all the way to the exit, or when your investment ends, how can you ensure that these things stay in place? And, even when you exit as an investor, that these good practices continue. And yeah, as Amelia, you mentioned, we, instead of the 3 billion target, we actually reached 11.4 billion, which was overwhelming and really mind-blowing for all of us. And thereof, 7 billion were invested by the DFIs themselves, the DFIs, IFIs, and the rest was co-investments with other private sector investors. When it comes to the systemic lens, I think one of our key learnings has been, one thing is to mainstream the gender lens to the way you've always done business, right? So the criteria are essentially the same, you just add the gender lens to it. And that has unleashed a lot of opportunities. And I think that has been a key aspect of it, because traditionally the DFIs, IFIs, and also all of our investees have always looked at ESG, and that is very much a risk perspective. So it has been about, seeing women and girls as vulnerable groups and ensuring that no harm is done, which is of course very important if we think about systemic issues like gender-based violence, etc. But it has also often, put women and girls into this basket of, the vulnerable, those who need assistance. And looking at the opportunity side, it has really helped make the business case, the impact case, saying that gender equality is also a catalyst. SDG 5 is a catalyst for all the other SDGs. And women and girls are agents of change, be it climate or, economic development. So I think that has also been very powerful. Something that we now have kind of the next frontier of gender lens investing, or where we still see a lot of systemic opportunities, is to apply a power lens. Because I believe if you take a gender lens seriously, you also look at power dynamics and systemic inequalities that have kept certain groups marginalized, and have also biased investment decisions and the way we set our criteria in the first place. And something that we have particularly noticed is that there is a new wave of women-led fund managers, diverse-led fund managers coming up that have very interesting gender lens strategies, diversity and inclusion strategies, but they're currently not getting funded because they don't meet the traditional criteria that have always been around. And so I think if you really want to break these structural barriers and promote kind of transformative impact at scale, we have to look at those barriers. And we're currently launching a new initiative, 2X Ignite, that seeks to overcome those barriers.
That's extraordinary, and it gives we have been engaging what is a systemic understanding, why mobilizing capital is essential to cover the gap, but again, for being at an earlier stage, this understanding of the impact that can be created. And I want to open the conversation for Barbara and Emily as well in this stage. We have been talking a lot about as well, not only the principles on how to look at the gender lens to make this impact, but also some strategies. You have mentioned some of them, but let's focus on this, because I think as a measure of the community of investors at an earlier stage, understanding how to make this impact for the portfolios, but you are already advancing incredible results. What do you consider to be an integrated approach to respond to the gender and racial gap, and how can diversity and inclusion strategy be at the core of the decisions? You have mentioned something, but how can be really at the core of the decisions, not an standing alone item on the agenda? How can be part of sustainability strategies? How can be part of the corporate sustainability strategies as well, the business model of any organization? And in your experience, what are the main gaps in the implementation of diversity and inclusion strategies to achieve this sustainable impact?
So maybe from EBRD's point of view, I think if we are serious about diversity and inclusion and promoting gender equality, it has to go beyond the talk. It has to go beyond the sort of, frankly, people speaking at panels. Money has to go there, and activities have to go there. There has to be a corporate attention to that. And I think many companies, many organizations, many MDBs also have gender strategies and diversity and inclusion strategies and so forth. But it is really only when it becomes, when this focus becomes part of the organization's incentive framework, scorecard targets. This, I think, is when you really get the focus. We have seen that very clearly and starkly, in a way, also at EBRD over the past few years. We introduced our first gender scorecard target this year, and the conversation immediately shifted from, do we need to do gender, to how do we do gender? How can we make sure that we meet our targets both for sectoral teams, for regional teams, and how can we meaningfully engage with the client? How can we make that business value add proposition to the clients, and in a way also very often respond to client demand as it is increasingly coming, from the regions, from the different types of sectors. So I think there has to be a clear sort of institutional incentive framework that is underpinning these efforts. Again, to give you our example, the number of projects that have a very clear focus on gender has increased by 100% between last year and this year, way above the actual target as it was set at the moment. But clearly we see a huge impact on that. Another area I think that is very important is to integrate gender into how you do business also across other priority areas. And in this context, I think a focus on gender and green investments is very important. Certainly at EBRD, a focus on climate change and green investments is one of our core strategic priorities. And making sure that gender is not an add-on here, but actually integrated into how we engage with our clients as part of the first conversations. And it's how we do business is very important. And we see that across a range of different areas where we have green investments, where we have now successfully integrated a focus on gender equality, from our Green Cities programs, where we empower women in those municipalities to gain the green skills and access to green jobs, green entrepreneurship opportunities through finance, through capacity building, advisory services, networking, but then also access to services. And very importantly, and this is something that Jessica mentioned earlier on, to be part of the decision making when it comes to adapting technologies, making cities fit for a greener future, that women are around that table and women have a voice and are being heard in terms of what type of decisions are taken. So I think a focus on green and gender is very important. The same applies to new digital technologies, the digital revolution, and the role that women can play in this context in relation to being active economic participants and actors that can really drive this process and benefit and create value for everybody. Another area is new investment areas, of course. So this is not just about an organization weaving gender into what they do, but also looking at what else can we do in order to promote gender equality. So the care economy is a classic example where we as EBRD are looking proactively at how we can support investments in care economy, work with our corporate clients to enhance their awareness and also the policies, corporate level policies that they have in place to make it easier for parents, both mothers and fathers, to remain in work, to come back to work. But also care economy opportunities for future investments and to shape policy. And then finally, of course, also the focus on gender-based violence and harassment, which I think is a key area that we all need to focus on to really make sure that we tackle this in all its forms throughout our investments. So in a way, it goes across a range of different areas, but this is really where we've seen the biggest opportunities to really scale up what we do.
I would echo a lot of what Barbara, you just said. I think just in terms of how we do business, I think that's such a key piece of it. And one thing at Morgan Stanley we've thought about is, okay, so if we're thinking about adding more diverse-owned firms, it's about the network. It's about knowing these, diverse-owned firms. And part of that is having diversity at our firm. And so, we've thought about that and thinking about, we created an Institute for Inclusion, really trying to both think about internal diversity at our own firm and then how we're supporting diverse-owned firms and diversity outside and in the communities we work in. We added a 5th core value around diversity and inclusion and really focusing on that. I think really, in terms of how do we take that step into just going from talking about this, as Barbara mentioned, to really having that impact, I think to Barbara's point, it's letting that drive the investment decision making. But how do you do that? And I think part of that is, measuring the impact you're having, but you've got to start somewhere. And then you've also got to think about how are you, looking at that data and that measurement. So one thing we find really important is impact reporting. And so, from the start, really being able for the investor to think about, okay, what is most important to me and how do I want to think about that? In 2019, Morgan Stanley launched something we called Morgan Stanley Impact Quotient, which is looking at the portfolio level and really being able to kind of measure the impact that you're having and the alignment of the portfolio along certain impact objectives that a client can select from, really putting the client at the center of the conversation. But you can select things like board diversity. You can select things like policies that the firms in your portfolio have. And so when you're looking at that data, it's much easier to say, wait, I'm not aligned to the things that I care most about. How can I change my portfolio to be more aligned? So I think you need that data to do that. Again, going back to, okay, it's not just about the investments, but it's also about the firm level diversity. We launched something called DEI, Diversity, Equity, and Inclusion Signal, in June, really focused on a lot of data that we're collecting. And I think going back to Barbara, and I think Jessica mentioned this as well, but it's about people, it's about looking beyond just the ownership level. It's about looking at the senior leadership, looking at the investment team, and then what policies and procedures do they have? And so we've kind of aggregated all this data. And importantly, when looking at the actual diversity, we said, okay, we don't just want to compare firms to each other, because we recognize and we know the asset management industry has miles to walk. Like it's not diverse today, or as diverse as it could be. And so we actually used as a benchmark the US Census data, given that the majority of our firms are based in the US, and that's where the majority of the data was coming from. And to say, like, that's the community in which these companies work. If they're not representative of that community, they're missing out on talent, and they're missing out on that diverse representation at the decision-making level. And so, I think that being able to kind of see and measure and look at trends over time really enable you to, think about, is my portfolio actually reflecting the things that I care about? And is my portfolio actually looking at gender and diversity more broadly? And then just going back to what I said before, that will also, enable investors, enable you to really ask these questions, because just, again, asking the question shows that you care and shows that the companies and the asset managers need to care as well. And so I think, the more that we're all asking and measuring and looking at the data, the more that we can ensure that this is actually being reflected in our investments and in the firms that we're invested in.
Thanks, Emily. It's really enlightening. And then for the new engagement, because we are saying, okay, when your impact is already having mature outcomes, like all the cases you are exposing, but for the vast majority, about how we are moving on to the last question and the last minutes of this panel. But I think this is very important in this engagement in diversity and inclusion strategies and conversations to arrive at your level of impact. So we know that investing in gender diversity is not only the right thing to do, but the smart thing to do. How important is still today the business case when building a successful portfolio with an integrated diversity and inclusion approach? We have been talking about that the whole time, but how important is still this business case? Do you see the ESG imperatives gaining a strength to deliver value among among all the value chain? And who would like to take the conversation? I don't know, Emily or Jessica, in this case, venture capital is a hot topic. How do we move the needle from this 2% of investment in female entrepreneurs? How do we move this conversation? And in this question, how still important is the business case for new engagement of investors in this discussion?
I'll jump in. So I think it's more important than ever. I think that, again, we've shown the data continues to come out that diverse companies make better decision making. There was a Wall Street Journal article or study that came out a little bit ago, and it showed that the top 20 companies in their study, I think, had like 10% performance, whereas the bottom 20 companies had less than 5%. So that's a huge difference, especially if you think about compounded over time. But beyond that, society is pushing for this. And so now you all of a sudden have really increased headline risk. If the companies if they're mistreating their employees, if they don't have a maternity leave policy, if they're not diverse and not thinking about, like, just one quick example. I remember hearing a story about a company that hired in a diverse kind of senior leader, and all of a sudden they started thinking about creating hair products for Black women, and it was this whole new market that they hadn't even addressed yet, and because it was not a very diverse, senior leadership to begin with. So I think, from the headline risk that you're going to see increase, like there's more news articles today, I think, than ever about lack of diversity, companies that aren't doing as well on diversity. And so, I think that can really, at the end of the day, hurt stock prices and hurt performance. And so ensuring that companies are ahead of that and really thinking about these issues, but then also thinking about, the broader consumer and how they're thinking about the products and services that they create. And then again, we just, the more and more data suggests that the diversity leads to kind of better decision-making and better long-term performance.
Thanks, Jessica.
I totally agree with you.
When opening
Totally
this,
agree with what.
so sorry for interrupting you. I would like to introduce with your answer. There is a question in the for the panel that I think it's really the right for closing these last minutes. With what we were exposing in this mainstreaming approach, how important is still this business case imperative? And then as well, there is a question: is there a different approach on the topic of diversity and inclusion between Europe and the United States, or different regions? And I think this is important when presenting the business case and the gaps we are seeing. It's important then to focus the conversation depending on the country you are trying to invest or operate in.
Yeah, excellent question. So on the business case, I can only echo what Emily said. Absolutely, we still need it more than ever. And despite this, despite the fact that now everybody seems to be talking about gender lens investing, and we really see a lot of traction in the market, also among mainstream investors. If we look at the statistics, the global gender gaps of the World Economic Forum reports, the progress is actually still backwards. So instead of making slow progress like in previous years, we're now making, we're going backwards. So there's still a lot to do. And also last year, in the COVID year, interestingly, while venture capital overall increased, the funding for women and especially women of color decreased. So there's still a lot to do, especially when it comes to women-led and founded businesses. Now, the topic of regional differences is interesting because what we have found is that the business case is very similar and equally strong across all markets. So in all emerging markets, different regions, also developed markets. But the kind of, when we talk about racial equity, gender equity, and broader diversity and inclusion, that is very context specific of what it actually means. And when we talk about, for example, racial equity, we all have an idea, about measures to take in Europe and the US. But what has been really interesting in the field of kind of international investing in emerging markets is that we see many different gaps. One is that when investors go to sub-Saharan Africa, for example, they tend to finance expatriate businesses that are led again by white men, which is, very counterintuitive, but you really see these gaps, especially in East Africa, but also in Southern Africa. And then in Latin America and the Caribbean, very similarly, it's, if you really apply a local diversity and inclusion lens, you identify many patterns of exclusion and of bias in capital allocation. And so simply just looking at gender is often not sufficient. What I find really inspiring there is, for example, the work that the IDB is doing, the Inter-American Development Bank. They have a very nuanced racial equity lens and kind of broader diversity and inclusion lens in addition to gender. And they're doing very interesting context-specific things there. We at 2X have a new initiative called 2X Plus, where we look at these nuances, especially in emerging markets. But we also realized it's a bit, inappropriate for us to just sit here, especially in lockdown, in the global north mostly, and, kind of coming up with a framework. So we actually have a call for proposals from local consultants. So we want to have a consortium of local consultants that are really grounded in these local communities and in different regions to come up with a contextualized framework that makes sense and that we can then embed in our development finance institutions.
Thanks, Jessica. I think that you are mentioning something very important. representation matters at any level. The UN has been facing the same challenges. You have been involved at the UN Women, the Generation Equality Forum, Barbara as well, Emily. How do we make this mobilization of capital to arrive to the hands that sustain at least the half of the population, but let's say entire families and communities? We have learned, I'm going to wrap here the conversation, but how it's very important. What I'm taking from the conversation is how do we go from small steps to systemic steps in an own domain of every capacity of a single investor or an institutional investor. But I'm seeing different kind of look at it, and depending on if you look at it from a risk perspective, and then it's like a kind of short-term imperative that you put in your portfolio. But when you look at it from the returns perspective, then you start to understand this business case, and then starting to increase your trust that investing in diversity and inclusion can make a more impact, but also as well your risk of investment. You increasing this principle of trust in delivering for people as well. And I think Barbara was very much an advocate on understanding this notion, not only on diversity and inclusion, but the human capital. Do not underestimate that the human capital is much bigger than the natural capital. And this is what makes global economy be productive or less. So we really need to start enlarging the conversation to make these SDGs work for a global purpose. And this is when I really would like to wrap the conversation for all investors or any advocate to look at diversity and inclusion, to really set purpose on what you do. And when you set purpose and you look at the SDGs from a different angle to a target to achieve, because you are changing the lives, not just the experience, the economic power and this equity connected to justice. We are inserting very human principles in these conversations. When we talk about equity, it's about justice. It's about eradicating a discrimination experience made by millions of people. And investors, the mobilization of capital is fundamental to mainstream peace and prosperity for all of humankind and resolve this gap that affects the half of the population. I don't know if you would like to add something else in relation of the human capital, Barbara, Emily, or Jessica. I think, Barbara, you have something to say in this notion of people in relation to investment.
Absolutely. Thank you very much, Amelia. Indeed, we are just about to launch our new quality of opportunity strategy, which focuses exactly on that, on human capital, and how we can, in a way, unlock human capital, make human capital more resilient. We've seen that the crisis happen with COVID in the last 18 months, but crises happen all the time. And in a way, equality of opportunity changes. Women have been disproportionately affected by COVID. But of course, there are other things. The green transition disproportionately affects people with certain type of skills or who are employed in certain type of sectors. So we really need to work with our countries of operation, with our clients, with societies, to build a resilient human capital that is fit for the future, that is fit to take the opportunities that are being created by digitalization, by, in a way, also the green economy transition. So, and women, of course, are center stage in all of this. So this is very much our approach. This is the lens that we want to apply. And this then also helps with intersectionalities, such as Jessica, for example, mentioned, which is so important. Gender is important, but it has to be part of a much broader approach that looks at human capital.
Thank you all so much for this inspiring panel. And thank you so much, Amelia, for being such an active moderator.